Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review, recording this late Friday morning on December 6th. So as I record this, it's been a pretty mixed week in the market, meaning like the big cap indexes have done pretty well, and a lot of the leaders have done very well as too. I would say the broad market, and not just like small caps, but other things like financials and industrials, and a lot of this stuff has been about 4 or 5 days in a row now that it's actually been pulling in a little bit while the big cap indexes are going up. So breadth, for whatever that matters, has been diverging a little bit just for the last week. Not a big deal, just something I'm noting. And if we come back in a week or two and that's continuing, it could be a bigger deal. But right now, just something to note. With the leading stocks, the other thing, the ones that are strong, excuse me, are tending to remain strong. Plus, we're still seeing a lot of pretty good-looking earnings gaps. We have seen a couple wobbles in some names this week. Some rumors of competition or some unexpected, like out of the blue news, plus a couple of earnings, stocks that got hit, which is normal. But overall, the action of leadership stocks still look good. Really, as I said last week, been writing about, the biggest thing to worry about is that nobody's really worried about anything. 4 months ago, we had the mini, not crash, but the meltdown in August. And right away after that, we started to see the big earnings gaps among growth stocks and stuff like that. But everyone was still nervous. Here we are 4 months later, about 4 months later, and a lot of these stocks have doubled. Some of them have done even better, and everyone's now, very bullish. So it's just, again, keep your feet on the ground. Short-term sentiment is very inexact. It could come into play, tomorrow or, next week, or it could come into play in late January. It's a very inexact thing, so you can't really trade off of it. But it is something to keep in mind, to keep your feet on the ground. Look for some good buy points. If you really want to chase something, go ahead and do it, but keep it small. Honor your stops, honor your loss limits. Don't get into trouble, because there will be a rug pull at some point. I'm not saying everything's going to fall 50%, but there will be a rug pull. And, you just want to make sure you have your risk in check so you're not panicking during that time. In Cabot Growth Investors model portfolio, we took partial profits in one name because it got hit. We didn't do it on the way up, unfortunately, but kind of on out of the blue news. But we're about 16% in cash. From here, I'm really just taking my cues from individual stocks. There's probably 3 or 4 names that if the market pulled in, or they pulled in a little bit, or shook out, or even just chilled out for a couple weeks, I could take a swing at. At the same time, there's a couple names we own that I could book some more profits in the near term and even build our cash a little bit higher, not on purpose, but just listening to each individual stock. Right now, we're about 16% in cash, and most of our stocks are acting well, thankfully. Okay, let's hop on the charts. As usual, I'm using a program called Market Surge. You can learn more at marketsurge.com. It's a product of Investors Business Daily. So here's the NASDAQ. The NASDAQ has kind of kicked into gear this week. This is what I mean. This week has been more about, don't get me, as I said, the leaders have done well, but it's been more about sort of the bigger cap names that have pushed things like the NASDAQ and the S&P 500 here to new highs. And clearly the intermediate term trend is up, still trending nicely above this red line, which is the 50-day simple moving average, okay? When you start to look at some of the broader indexes, we're just seeing a little bit of this. Now right now, this is nothing. I mean, I'm not that short term, so it looks fine. This is the New York Composite. This is the IWM, so this is the Russell 2000. This is the mid caps, okay? They're all still clearly in intermediate term uptrends, which means, 90% to me. But I'm just noting that it has been 5, 6, 7 trading days now, depending on what you're looking at, where the broad market is starting to stall out while the big cap indexes grab all the headlines and say they're hitting new highs, this, that, and the other thing. Just something to watch. But overall, intermediate term trend is still up. The other thing sort of on that front is not just, like I said, small caps, but here's financials kind of pulling in. This is the XLF. This is the regional banks, KRE. You can see it's been pulling in. They could be decent entry points, honestly. I'm not a huge, regional bank investor myself, but I'm just saying chart-wise, kind of consolidating in here looks pretty good. But just something to note, they're diverging a little bit. So we'll see how that plays out, okay? In terms of the growth indexes, we'll get into individual stocks in a second. But they have been more alongside what we've seen in the big cap indexes. This is the equal weight NASDAQ 100, basically hitting new highs. The IBD 50 index, which is, this is as of yesterday, so today it's probably up a little bit as I record this, but this is, a bunch of stocks that have high relative strength and good sales and earnings growth, so it's kind of the pond that I fish in, And then the IBD Mutual Fund Index, which is real money mutual funds. It's this thick blue line, obviously hitting a new, it says RS rating here, but take that out. We're looking at the thick blue line here and hitting new highs. So things are mostly in gear. The intermediate term trend is up. It is, I don't want to say euphoric, but it is, a little frothy out there. A lot of money's been made. People are pretty excited. The news is good. The Fed is cutting rates, might cut it again next week, I think it is, or whenever it is. So, people are optimistic. The economy's good. So just keep your feet on the ground and see how things play out, okay? The other two things before we get into individual stocks here, let me, in terms of, I don't want to say negative. If you followed me for a while, when things are down in the dumps and we're defensive and we hold a lot of cash, I am looking for signs that things are turning up. It's not that I'm buying. It's just you just want to be aware if the wind starts to change. Same sort of thing here. I'm not looking for reasons to be negative, but this is the SMH, which is the chip index, okay, ETF. Listen, my bias, I hope it just goes up from here. There's going to be a lot of growth stocks that do well if chip stocks get going, okay? At the same time, just, excuse me, being unbiased, this is kind of this is the peak back in July. This is kind of a topping pattern, Now, I'm not saying, I'm not a chartist in the sense of like, oh, therefore, this, the target is down. I'm not picking anything like that. I'm not predicting anything. I'm just saying chips are lagging. And, a couple of bad days, which might not happen, but if they do, then you're below longer term moving averages, okay? And even when you look at something like an NVIDIA, which looks better than the chip index as a whole, and at the end of the day is 10 points from all-time highs. So NVIDIA is not weak or some major red flag. I would just note that even this, relative to the overall market, has been basically an equal performer, underperforming by a smidge since the middle of June, okay? I would say this is more descriptive than predictive. I'm not saying because of this, therefore this, but this is something I would just say on the margin that I am keeping an eye on. The other thing in terms of sentiment, I think I mentioned this last week. This is GameStop, which to me is kind of like it's kind of the tell for the, the meme, the speculative stuff. You often see the stock go wild on, Roaring Kitty or whatever. Roaring Kitty did make an appearance on Twitter or something. I don't know exactly how it works, but so the stock kind of popped in here. It had been getting a little steam, but I wouldn't say it's super hot. Again, it's just more something to keep an eye on. If all of a sudden next week or the week after, GameStop's up here, which I'm not predicting that, but if it is, again, that would be another sign that, hey, it's frothy out there. You want to make sure to keep your feet on the ground, okay? Just a couple of things to watch. But overall, you can always find something to worry about in the market. It's too good. It's not good enough. It's flat. It's quiet. It's too loud, Overall, the rubber meets the road evidence is bullish, so we're, generally bullish too, okay? The other thing, too, is with leaders, like I mentioned earlier, as we head into individual stocks, we're still seeing a lot of stocks emerge. Now, this is Snowflake, SNOW. This isn't my normal pattern. There's a lot of overhead here, even from earlier this year. Okay, one thing I would just, and you can see earnings here. I don't know if you can read it, but earnings have actually been declining here the last 3 quarters. So obviously it's something of a turnaround. It's had a huge decline here over the last couple of years. But what I would say is that this earnings reaction here 3 weeks ago, it was the stock's biggest weekly volume ever, I believe, even higher than the IPO. But it was pretty damn big. And it's just been acting well since, okay? Now, there is overhead here. A lot of these things could easily pull back 5-10%, look totally fine. But Snowflake is kind of an intriguing, big cap, $60 billion market cap option with a unique offering and strong sales growth and good projections for next year that might be turning the corner. So it's kind of an interesting name. Shopify, I've mentioned. Shopify is another one. This one broke out to not all-time highs, but whatever, multi-year highs here. This was the one that had the huge earnings gap, almost 10 times average volume, which is a big clue, especially for a liquid, well-traded name. And it's starting to follow through on the upside. It had a little bit of a pullback, but looks totally fine. Again, these things could pull back. If this thing pulled back 10%, it would be down here. So it still could be totally fine if it does retreat, but Shopify looks good. This week, CRDO Tech, I'm not sure what to do with some of these, but you're getting some of these that are, I wouldn't say it's early stage. This is CRDO. Clearly it's hot and heavy right here. But, massive volume, huge increase in projections, like just, way above estimates. And so this is just a name you flag, and hopefully it can kind of settle down or you get some shakeout in the market. But CRDO is something that's sort of back on my watch list. Lululemon, as I record this, we'll see what happens. But this is very big. So this is LULU, of course, not in the AI sector, of course, but had this big double top, had a huge decline. It's been coming back here for a couple months, but nothing really, still below the 200-day line. Last night was earnings. We'll see how it closes. We'll see what the volume is. I'm sure this volume rate will decline. As of now, it's on pace for 10 times average volume. My guess is it won't. Usually the way this works is it'll end up being 7 times or 6 times by day's end, but still a hell of a lot of volume and gapping up. There's old overhead, but again, it's kind of an interesting sort of turnaround situation in one of these big liquid names that's gapping up, okay? And then not big and liquid, but a nice setup here. This is Fresh Pet, which had FRPT, which has this sort of pattern of, chilling out. Over time, it's had a good run, but a lot of, many weeks, couple months of chilling out, has a nice run, chills out for a while, pops on earnings. Now it's kind of calming down in here. Pretty decent risk reward. I'm not saying it's here. Maybe it shakes out first, but FRPT, kind of a nice pattern. You can see on the weekly chart, it's very well controlled in here. No selling. It's not like any big selling shown up. That would be kind of a weird clue. So that looks pretty good. If we do get rotation, which I'm not predicting, but I'm just saying, I am keeping an eye on some of these things that look good, but they're not really where the market's at, and they're not really powering ahead yet. So this is ARGX, ARGX. You can see the relative performance line is kind of flat here for the past 4 months, even though the stock's been going up. So relative to the market, it's been kind of performing normally. What I would say here is, you had the high profile, the RFK, new administration, drug stock sell-off, hit the 50-day line. Then you had this kind of, 6 out of 7 day, what I call a volume cluster up. And I'm not saying it's powering ahead, like, it's doing okay, it's doing just fine. But, if we see more of a rotation to some biotechs, it wouldn't surprise me if this catches hold. Excelsius, EXEL, I'm not sure how to pronounce this, but EXEL, beautiful breakout here. You can see the weekly chart. Kind of a sleepy stock, started to get going a couple months ago, then really broke out a few weeks ago, and now it's just kind of consolidated here into the 25-day moving average. How you want to play it, if you want to play it, I don't know, but just kind of an interesting setup that I noticed. And then a lot of cyclical stocks, they're not doing anything right now, so I'm not Mr. Cyclical Stock anyway, but this is Herc Holdings, HRI, had this huge, in fact, I think on the monthly chart, you can see it had this huge 3-year breakout just a couple of, maybe a month and a half ago on earnings. You can see this huge run. This was earnings right here. And now it's been, and then it gapped up on the election and all this stuff. And then it's come in, it's kind of consolidating in here. No real selling, starting to quiet down. You're starting to see this pattern a lot. Deer is a different animal, but this had a big earnings move up. Again, it's Deer. It's not your most dynamic name, but a big earnings move up. Now it's kind of pulling back normally. So kind of see how this goes. It got downgraded today, but no real selling coming into it. So can it stabilize and resume? And then XPO, which has been a leading trucker in here. It had a big run last year, consolidated for most of this year, broke out 3 nice volume weeks here on the upside. And so far it's holding pretty well. So it's good to keep some of these names on your radar, because then if we come in next week or next month and all of a sudden eventually some of this growth stuff gets hit and money rotates into the Dow, that sort of thing, I like to have 2 or 3 of these names that you actually think there's some stories there, you think there's something there, sponsorship that you can jump on if you want to, okay? And then back to growth, just looking for pullbacks. Okay, this is DoorDash, which I've mentioned before, DASH, 9 weeks up in a row. A lot of them peak closes, I think 6 of them, if my mind's eye remembers that. Now you've kind of had, I don't want to say 4 weeks of consolidating, but kind of whatever this is, 3-4 weeks of just sort of chilling out. Maybe you get a shakeout, maybe you don't. But if you do, my guess is, there's a gap down here. If you get anywhere close to the 50-day line, my guess is the risk reward will be pretty good. You have to see what the world looks like then. Maybe the market's imploding, of course. But, just going with what I see now, my guess is the first pullback here will be buyable. Reddit, it's a different animal, RDDT. This is a very short consolidation. But if you got another pullback, you're not that far from the 25-day moving average here. So that's just something I'm kind of keeping a loose eye on. Blackstone's a bull market stock. This is another one, kind of like Herc. Yeah, you had this 3-year, whatever, basically long-term breakout as of a couple of months ago. And it's had a pretty good run here. It hit round number resistance near 200. It's pulled back. It's been a little bit, I will say it's underperforming some of the other bull market names, so on a very, very, very short-term basis. But this would be one that maybe like if it started to resume higher, it would be kind of just a normal pullback after a big run. You know what I mean? And last but not least, I would just mention GE Verona. This is kind of, this is one of the spinoffs from GE. Obviously, it's had a big run. My bias with some of these is it probably, 350 has been a little bit of a ceiling here. It's acting near term like it does want to pull in. But after such a big move, it's been consolidating here for a few weeks. You did have 1 week of selling. I don't know. My guess is like a pullback. You have to see how it looks like. But if you did get a pullback, my guess is the risk reward, kind of like DoorDash, would probably be pretty good. And if you lose, you lose, but you're losing small. Whereas if you win and it's a normal pullback, you could win really big. So those are just some names I'm kind of keeping on the back burner to see if they shake out or if there's a rotation or if the market pulls back, so on and so forth, okay? Back to the market, I mean, all I can say is this is the NASDAQ, but you can look at whatever. We're extended short, whoops. Oh, there you go, market surge. But we're extended short term, above the even 25-day moving averages. It's a little frothy, so just keep your feet on the ground. I still see some things to buy. I mean, we have Cabot Top 10 Trader every week. But, you want to pick your spots, and if you miss it, you miss it. Hopefully you're already heavily invested, of course, and enjoying the ride. But, the trends are up. Things look good, and my guess is we'll see how it goes. But if we do pull back, say if we had a pullback like this, where it's kind of sharp, it's 1 or 2%, makes you feel uncomfortable, that could create actually, I think, a new batch of buying opportunities, at least for the short term as we head into year end and into January. Okay, that's all the time I have for today. Thanks for listening and watching, and be sure to come by again next week for another Cabot Weekly Review.